Welcome back to the channel. If you are new here, my name is Andrew and today I will be sharing 10 best stocks from my wish list. This is not the video where I do deep dives on all these 10 companies, but I prepared the short summary for the bull case, the risks, the buy target, and also load the boat price target. Load the boat price target is where I am selling my house and buying into the stock at this price. What's going on, investors? Hopefully guys are doing well out there. Let's immediately start from the first company, Amazon. For the bull case of Amazon, I believe robotics and automation will boost profitability significantly, which is not yet priced in by Wall Street. Amazon is very diversified business with a lot of optionality. The tailwinds from AI for the AWS business and great management with Jeff Bezos before and Andy Jassy right now. The bear case is of course tariffs, global recession, and antitrust risks. Amazon's revenue is growing up to the right very smoothly, and if you can see the last three columns is projections from analysts, and the revenue will continue to grow and will reach $1 trillion before 2030. Amazon continue to improve profitability. From 2015 to 2022 the profitability was jumping up and down, but currently we can see that Amazon started to boost, and if you can see the last three columns are actually analyst expectations, and in 2027 Amazon is expected to reach $206 billion in cash from operations. Absolutely amazing to see. From the perspective of valuation, currently Amazon is trading dirt cheap at this valuation. Before, Amazon was trading around 23, 25 price to operating cash flow, but currently it's like 13 and was reaching even 10 in a bear market of 2023. Which kind of upside we can expect from Amazon if we take $206 billion multiplied by average price to operating cash flow of 1876, we get $3.8 trillion. This is 94% upside from here in 2 or 3 years. I believe load the boat opportunity to buy Amazon is here $160 per share, because here we have a lot of consolidation from previous all-time high and also coming from the volume profile. These indicators in TradingView is called visual range volume profile, and if you can see a lot of shares were traded here, so I believe this is the load the boat price target. Buy target for me is 180. Under 180 Amazon is undervalued. At 160 Amazon is just sell your house to buy Amazon. I'm just kidding about selling the house, but you get the point. The conviction for me is very high for this company. Coming to the next company, and this is Microsoft. Microsoft, the bull case is very diversified and international business, recession proof. Most of the revenue are recurring. The management with great track records. The bear case is valuation, which could lead to mediocre returns. Also antitrust. Most of the big tech company, they are kind of monopolistic companies, so they are experiencing antitrust risks as well, and also cyber attacks, because most of the planet is using some of the products from Microsoft. Microsoft revenue is keep growing, and you can even see this chart is a bit like exponential. $361 billion is projected in 2027 from Microsoft. Microsoft was in buying range just few days ago before the earnings, but now after the earnings they are blasting higher. If you can see, this is the earnings and blasting higher. I believe the good buy for Microsoft is here to retest the previous all-time high. I think under $380 per share Microsoft is undervalued, and under $340 per share this is the load the boat price target for Microsoft. The conviction for me is very high for this company as well. Coming to the next company in the list, and this is Google. For the Google, the cloud has growth and profitability is improving fast. YouTube is one of the best businesses out there. Netflix need to invest significant amount of money into building the content. What YouTube is doing is just sharing the profits with the creators. Huge user base for Alphabet, and also dirt cheap valuation. From the perspective of bear case, antitrust, potential split of the business, especially if government would like to split the Google Chrome, this would be very bearish for Google's business. Recession and competition, of course. Many people think that Google search is dead and not growing anymore. In the numbers we cannot see this just yet. Currently Google search is still growing 10%. For this kind of huge business, I believe 10% is not so bad. So from the numbers perspective, I don't really see that Google search is dying, even though from my own personal experience I am using LLMs more and more. Google Cloud has a beautiful picture of operating leverage. The revenue keep growing up to the right, and from the losing money, currently Google Cloud is printing $2.1 billion in operating profits from Google Cloud's business. Price to operating cash flow is dirt cheap, trading at COVID levels. I believe Google is undervalued here. I was buying Google right here at this monthly candle on testing this 10 years trend, and I believe every time high quality company is retesting very long trends like these 10-year-old trends, this is a great buying opportunity for long-term investors who already finished the research and set the alarm in the trading view and just waiting to catch the right price for the company. Verdict: I believe Google is undervalued under 175 and load the boat at 150. The conviction is very high for this company. If you are enjoying video so far, sharing my bull thesis, price targets, and load the boat price targets, please consider subscribing to the channel. On my channel, I do fundamental analysis, I run public YouTube portfolio, I do educational videos. If any of that interests you, welcome to join. And with that being said, let's continue. The next company is Meta Platforms. The bull case is highly motivated, founder-led, that Zuckerberg just keep delivering 3.5 billion users, high profitability. Bear case: antitrust risks, recession. Most of the revenue is coming from advertising. Meta's revenue is growing up to the right. Meanwhile, Reality Labs is not really growing so much. From December 2021 is basically stagnating here. Net income is exploding, which is showing the value proposition and how Meta could target these ads. The DAU keeps growing. I would say this was the bear case for a long time, that Meta cannot continue growing this DAU, but here we are. 3.9 billion people is using Meta's products every single day. Absolutely amazing. Average revenue per user is also climbing and currently $44.6 per user. Where is the load the boat for Meta? I believe load the boat is around 380. Here you can see we also have a channel, and if Meta comes to retest this bottom line of this channel and also the previous all-time high, I think this is the load the boat. But currently in the middle of this channel, you can dollar cost average into the Meta. I'm big believer, and Meta is one of my biggest positions in the portfolio. Under 500 is undervalued. 380 is load the boat for Meta. High conviction for this company. Meli. The next company in the list is Meli. The bull case is business very similar to Amazon. It has marketplace, it has advertising, it has logistics, it has a credit business, it also has the fintech. Very similar to Amazon. High optionality, founder-led, very high growth, focusing on emerging markets, mostly South America. Bear case: macroeconomic challenges in Latin America, competition, and also regulatory risks. All the businesses of Meli keeps growing. The profitability are just exploding, and cash flow operations in the last reported year is north of $8 billion. From the perspective of valuation, when Meli was focusing on growth, it was traded at around 12 price to sales, but now it's trading at around 4, even though now it's focusing more on the profitability. I believe this is the opportunity for investors. From the perspective of price to operating cash flow, it's also trading currently at dirt cheap levels as well. Where to buy Meli? I was buying Meli here on the retesting bottom of this channel, and if Meli comes back to retest it again, I believe this is opportunity for investors. $2,100 is undervalued and $1,720 is load the boat for Meli. My conviction is medium. I'm still researching the company. This is a bit more complicated company, and also it's operating in the region I'm not familiar too much. The next company in the list is HIMSS. The bull case for HIMSS is it has very strong growth. It's disrupting massive healthcare industry, recurring revenue. From the perspective of bear case, competition and also acquisition. If HIMSS will be acquired by a bigger competitor, we will get just 50 or 60% premium on the shares we hold. But if HIMSS continue to execute, we can get 5, 7, 10x on our investment. HIMSS revenue is exploding and projected in 2027 to have $3.3 billion in revenue. Subscribers also growing, even though the growth is slowing down. The revenue per subscriber is also growing, reaching $64 in latest reported year. Where to buy HIMSS? I was buying HIMSS here aggressively at $25 per share. Now if HIMSS will retest this blue line channel, I think this is the opportunity for investors as well. If you're enjoying the video, please consider subscribing to the channel, and let's continue. I believe under $35 HIMSS is undervalued, and under $25 it's load the boat opportunity for investors. Coming to the Tesla. For the bull case for Tesla, it's a self-driving, it's robotics and founder-led. For the bear case, valuation. Currently Tesla is not valued as a car company, even though it has a auto business and also energy business, but now it's already priced as a software and robotics business. Also brand perception risks, recently Elon Musk was involved in the government and it leads to the problem with the brand and also of course competition, especially from Chinese rivals. Tesla's revenue was growing very nicely until 2023, and from 2023 it has a plateau. Same picture we see with deliveries. And where to buy Tesla? I believe that Tesla load the boat opportunity for Tesla is 180, but if Tesla will retest this blue line, I believe this is another opportunity to buy. Under 250, undervalued. 180 is load the boat opportunity for Tesla. The next stock, Elf Beauty. For the Elf Beauty, the bull case, they have very smart marketing and sales strategy. They are leveraging TikTok, Instagram, Reels to promote their products. It's recession proof because I believe this is one of the cheapest cosmetics and strongest brand. So I believe it will definitely survive through the recession, and also valuation has corrected significantly from all-time highs. From the bear case perspective, it's China tariffs, of course, and slowing growth. One of the worst thing can happen to the growing company is slowing growth, and this is exactly what happened to Elf. You can see here Elf were growing north of 80%, and now the growth slowed to 31%, and we can see that projections is almost close to 0% growth. Of course, this is devastating for the company. Meanwhile, one of the bull cases is that actually Elf is quite diversified business, and international revenue is now generating $70 million. Meanwhile, the United States is generating 285. So sooner or later, the international will catch up and Elf will become much more diversified than it is today. In terms of the chart, you can see the correction is significant from 240 to basically $40 per share. I believe that $60 per share is undervalued for Elf, and under $45 per share, it's load the boat opportunity for Elf. The next company on the list is Crowdstrike. The Crowdstrike, the bull case, is one of the best cybersecurity player out there. Very high growth, strong profitability, high customer retention. The bear case is cybersecurity outages, which we're experienced last year, and also valuation as well. Usually software as a service companies like CrowdStrike, especially leaders, are valued very, very highly. The revenue is growing up to the right, even though the growth is slowing to 25% in the latest quarter. The retention were very nice, but now after the outage we can see 118, 115, 112. So this is the trend investors definitely need to keep in mind. Will this dollar-based net retention rate keep dropping? Currently it's not very nice to see this kind of trend. But from the perspective of modules, we can see that CrowdStrike keep cross-selling, and 5+ modules is used by from 59% of customers to 67% of customers. And also for the 8+ modules, you can see they started to report in October 2024 from 20% to 21%. The CrowdStrike is just keep cross-selling the products to their customers. Where to buy CrowdStrike? I was almost pulled the trigger here on the retest of previous all-time high, and now I regret that I didn't. The CrowdStrike blasted higher and almost reaching the all-time high recently. I believe that load the boat opportunity for CrowdStrike is $230 per share, and the undervalued CrowdStrike will be under $300 per share. Coming to the Palantir, the bull case for Palantir is this is one of the biggest beneficiaries of AI revolution. Recurring revenue, strong balance sheet. Bear case, of course, valuation. Palantir is ridiculously expensive at this valuation, and of course, government regulations. Currently, Palantir has good government relationships, but this could change quite fast in the future. From the perspective of revenue growth just absolutely collapsed to 12% year over year in 2023, but now reaccelerating all the way to 40%. And the next Monday Palantir is reporting, we will see which numbers will be reported from the Palantir side. The balance sheet is very strong. $5 billion net debt for the Palantir. For me, the main bull thesis about Palantir is of course commercial business, because government business is difficult to project, but for commercials, more and more companies will want to optimize the margins and make companies more efficient, and I believe Palantir could help them here. In terms of the customers, keep growing up to the right, and also the net dollar retention rate is also climbing from 107 to now 120. This is very, very nice. It's even higher than CrowdStrike has. Where to buy Palantir? I believe that Palantir is a buy at $60 per share. So under $60 per share, Palantir is undervalued, and strong buy for Palantir, load the boat price is $45 per share. I hope you enjoyed this video. If you did, make sure to smash the subscribe button. I appreciate your time watching all the way until the very end of the video. Thank you so much, and I will see you in the next one.